here, subsequent event. There's a particular or there's an individual auditing standard related to this topic. And I'm introducing you to something called period A, period B, and period C here. Period A is the period we just talked about. Okay. Again, this ABC, remember, it is just an indicator I use to help you easily distinguish data auditor's report. So we are talking about this period here. So why we need to distinguish this period? Because auditors got different objectives in these different periods. Okay? And period B and period C is very tricky because in real life, almost like 90% of the time, this two date is the same. We date our auditor's report when the directors of the company sign the financial statement and then issue it on the same day. We normally do this on the same date. Because we always did it in real life, most of the time in examination, the question will assume this two date is the same. Unless the question mentioned these two dates are different, you can make an assumption that these two dates is the same. So most of the time, during examination, period B and period C are the same period when these dates are the same. So there's only one period here. So therefore, in this case, during the examination, you must look for the date of the auditor's report when it comes to a question before the date of the auditor's report, or it is happening after the date of the auditor's report. This is the only indicator that you must identify during an examination. You must be able to tell it before or after. And I'm going to teach you second thing you need to learn in this examination. You seldom see me write an accounting standard in my exam guide. There's only few topics that require me doing it. Because subsequent event, why we have an auditing standard regarding subsequent event is because there is an accounting standard talking about events after the reporting period. And under HKS 10, there are two types of event after the reporting period. And your LP is incorrect because your LP is saying there are two types of subsequent events. If you go back to your LP said there are two types of subsequent event. Type 1 subsequent event is adjusting event. Type 2 subsequent event is non-adjusting event. I'm telling you, there are no two types of subsequent event. There's only one type of subsequent event. Subsequent event are events that happen after the date of financial statement. They are called subsequent event. Okay? We just need to identify whether the event is happening in period A or period B, C. Okay, this is just the period. The period is still distinguished by the date of the auditor's report. So subsequent events are all the events that have impact on the financial statement after the date of financial statement. This is the same concept for HKS 10. Events, so there are two types of events after the reporting period, which we call them adjusting event and non-adjusting event. There are no two types of subsequent event. There are two types of events after reporting period, which require us to adjust our financial statement or which require to disclose the event. So you need to make yourself extremely clear at this moment. Adjusting event, you need to adjust your financial statement. For non-adjusting event, you still need to adjust your financial statement, even it is a non-adjusting event. Then you will ask me, then why we call it non-adjusting event? I don't know. Don't ask me why. You still need to adjust the financial statement from the audit perspective. Why? Because for non-adjusting event, you are adjusting something very specific in the financial statement. You are adjusting the notes to financial statement, or you can say we are adjusting disclosure. This is actually adjusting the figures in the financial statement itself. You are doing debit credit. Okay, you are moving the figure, so we call it adjusting event. Why we call it non-adjusting event? Because in this case, we are not adjusting figures. We are adjusting the disclosure. Or I use a better word. You need to add or change the disclosure for an non-adjusting event. This will be less confusing. Okay. Notes to the financial statement or disclosure is still part of the financial statement. So from our auditor's perspective, remember this is Module 13 examination. From auditor's perspective, adjusting event or non-adjusting event, there are no difference. The only difference is we need to check whether the adjustment of the figures is correct. For non-adjusting event, we need to check whether the amendment or new or the addition or change to the disclosure is correct or not. So to us, either one of them are material misstated or incorrect, it means we may not be able to issue a clean opinion. Okay? So do remember, because some of you immediately see the word adjusting event and non-adjusting event, and later I will tell you there are responsibility, different of responsibility between these two types of this subsequent event happen in different period before or after the days of auditor's report, because we have different responsibility. And when you mix it up with adjusting event and non-adjusting event, you guys really write down some very strange and incorrect answer. Okay, I see too much. So you must make yourself very clear about the concept of adjusting event and non-adjusting event. Non-adjusting event requires disclosure. I say likely necessary because it's not 100%, but 99% in the examination will be something required disclosure. If not, then I've got nothing to test you about. Okay? So disclosure is likely necessary. Amount and or disclosure is necessary to be adjusted. Okay, so both things we have work to do, adjusting event and non-adjusting event. So we are now looking at auditor's objectives. Boring sentence. If you just read it to here, obtain sufficient appropriate audit evidence about events occurred during the financial period, right? That is what we already learned. We are just changing this to between the date of the financial statements and the date of the auditor's report. You can see I marked the word IE before here. We need to obtain sufficient appropriate evidence for event occurring in period A. We need to obtain sufficient and appropriate evidence for period A. So, does it mean the sentence is so specific, right? That we need to obtain sufficient appropriate evidence. So, does it mean that we do not have to obtain sufficient appropriate evidence for events happen after the date of the auditor's report? You may have this confusion, right? So let's keep reading first. If it's happened in this period, that require adjustment of or disclosure in the financial statement are properly reflect in those facts as in accordance with HKFRS. So you may get confused if I didn't tell you just now. Require adjustment of meaning adjusting events or disclosure in it means non-adjusting event. So, no, again, I'm reminding you, please remember this again. No matter it is an adjusting event or non-adjusting event, you still need to obtain sufficient appropriate evidence regarding that event as long as it is happening in period A. Okay? So, the confusion comes. What happens if things happen in period B and C? It can still be an adjusting event if it happens in period B, C. Or it can still be a non-adjusting event happen in period B and C. So remember, the date of when the events happen do not affect whether it is an adjusting event or non-adjusting event. You need to look at the event itself. Okay, look at the definition of HKS 10 to determine whether it is adjusting event or non-adjusting event. When did the event happen is irrelevant in this part. This part is relevant to the auditors only. This part is this is an accounting question, an accounting treatment, accounting standard issue. Okay, so it is not related to an audit issue. Period ABC is an auditing consideration. So we are in an auditing examination. This is what important to us. And this is not important because we have to adjust the financial statement anyway. It is adjusting event, non-adjusting event. So what's the confusion? Jackie, you still haven't told us the confusion. Here's the confusion. Respond appropriately. And the words they use here as I use green because it's facts. Facts that become known to the auditor. And the date here is after the date of the auditor's report. And the sentence here is, had they been known to the auditor at that day, may have caused the auditor to amend the auditor's report. So, what's this talking about? What is facts that become known to the auditor? And here it is obtain sufficient appropriate evidence about whether events on this period and response appropriately, the word that you said. How do we respond to an audit issue? We only got one way to respond to any audit issue. What we have, this is the sixth lecture. We already go through 5 lectures. So what do we do to respond to an audit issue? We always perform further audit procedures, whether it is risk assessment procedures or audit procedures. Why do we perform those procedures? Because we need to obtain sufficient appropriate audit evidence. So, second part, no difference. When the event becomes known to the auditor, you will still need to do the same audit procedures as if the events are happening in period A. So how do you become known to the auditor? In the examination, is that when your examiner writes it in the case that you know this event, your client tells you the event. Once you read the event, it becomes known to you, and you will have to respond appropriately. What you do? You will need to perform audit procedures to clarify the event, notice the financial impact, assess the risk of material misstatement, and design further audit procedures to obtain sufficient appropriate audit evidence. Of course, there is a prerequisite here. May have caused the auditor to amend the audit report. So, what will lead to us amend our auditor's report after we sign the original auditor's report? What will may call first amendment report is that the financial statement actually contain material misstatements because of this subsequent event. For example, in the case just now, everything's burned down. Although this happened after the financial statements, after the dates of the auditors, after the year-end date. As at the year-end date, the inventory, the PPE of the company is still intact as at that date. So technically, the financial statement, the balance sheet, the inventory figures, the PPE figures as at the balance sheet date is still correct. But the fact is that on January 15, everything's burned down. So its report should have been adverse. The opinion should be an adverse opinion, not a clean opinion, because everything burned down, there is a going concern issue. This is what this part is talking about. So if the event happened actually required an amendment for the financial statements, that leads to a material misstatement if we did not make that adjustment. Then our objective is the same. Remember, this is objective, right? Auditors always only got one objective. We are obtaining sufficient appropriate evidence so that we can issue a clean or correct opinion. In this case, if something happened that leads us to the need to amend the auditor's report, we will have to do so. Okay, so audit procedures in response to subsequent event, here it is. Okay, and you always need to say this is an adjusting event or not. You can see I rate under period A, B, or C. This is again the first thing I tell you when we start this topic. The timing of the period is irrelevant. You always need to calculate this adjusting or not adjusting event. Okay, don't be confused by your responsibility to obtain sufficient appropriate evidence or whether it's just a fact become known to the auditors at PVC. This is a confusing point for a lot of candidates. Okay? Don't make these mistakes as others. There's another auditing standard, okay, 570, that's still with going concern. So what is going concern? Going concern is a fundamental accounting principle that we use when we prepare financial statement. It's the essence of the entire accounting. Why we do accounting? Why we need to make accrual? Why we need to classify things into current and non-current? It's all because the going concern. We need to know whether in the next 12 months, okay, the next financial year, our company is still operational, okay? We are not going to shut down our company or there's something happened that force us to wind up the company. This is what going concern is about. The concept of going concern again comes from an accounting step, which is HKS1, presentation of financial statements, okay? So first things you need to learn in this chapter, there are three situations that you may come across. First of all, remember, nothing's changed. Everything you learned before this minute, this moment, this second are relevant. I'm just adding something additional to your knowledge. The entity is a going concern. Financial statement prepared in a going concern basis. This is what we have learned about in the past 5 lectures. Okay? Nothing's happened, nothing's affecting the going concern. Everything's on my plan is going smooth. I got sufficient appropriate evidence, clean opinion. So if the entity is a going concern and the financial statement is prepared under going concern, there's no impact. This chapter adding 2 things, 1 and 2. The entity is a going concern. It means that we expect the company is still operational in the next 12 months after the financial statement period, after the year date, after the date of the financial statement, okay? Still operational in the next 12 months. We think that is still a going concern. But there's something called material uncertainty exists. There's uncertainty. Financial statement will still be prepared on a going concern basis. But there will need to be adding something called disclosure of material uncertainty. It means that basically the company is still operational, but there is a slight possibility that the company may not survive the next 12 months, but it is not definite. So it is a material uncertainty exists. And the last part here is that the entity is not a going concern. Okay, the financial statement cannot be prepared under going concern basis. Then you will need to switch to an alternative basis. You don't have to know what are the alternative bases. Okay, there are a lot of different bases you can pick other than going concern from accounting perspective. For this examination, for auditing perspective, you only need to know the one alternative basis. That's enough. And because the financial statement is not prepared under going concern and using an alternative basis, you will need to disclose the basis. You need to tell the user this financial statement is not prepared under going concern basis. Draw their attention. So this is the three situations basically that can happen under HKAS 1. If you are preparing your financial statement in accordance with HKFRS, this should be the three situations. But from our auditor's perspective, anything can happen. As long as your client is preparing a financial statement not in accordance with these three situations, that will probably lead us to issue a modified opinion or even an adverse opinion in this case. Okay? Definition of material uncertainty: event or condition that cast significant doubt. I call this going concern risk. Remember, in the topic of fraud, we learned about something called fraud risk factors, something that will lead to risk of material misstatement due to fraud. Same concept under going concern. I call it going concern risk because there is a risk of material misstatement that leads to going concern problem. I generally call it going concern problem. What are the going concern problems? There are only two going concern problems. These two. It's why the material uncertainty exists, or the risk is so high that we can definitely say the entity is not a going concern. Okay, so you will need to look for, okay, what is this? Green. You will need to look for these events or condition or going concern risk. Going concern risk is just risk of material misstatement. It's one example of risk of material misstatement. But this particular risk will lead to a very particular situation in the financial statement. That's why we have a separate topic called going concern. If you're looking back to here, I'm going to say the same sentence again. Nothing's changed. We are still dealing with risk of material misstatement, just that the risk now is not control risk, it's not inherent risk, it's called going concern risk. But technically, going concern risk is a inherent risk because when you operate a business, there's always risk your business will shut down. You cannot continue business. So going concern risk is just a type of inherent risk. But because of HKAS 1, we have to deal with it in a particular manner, the accounting standard. Likewise, as an auditor, we have a specific objectives that we need to do. So again, following obtain sufficient appropriate evidence, you need to tell whether the going concern assumption is appropriate. Okay, so i.e. is whether the entity is a going concern, is or not a going concern. Okay, this is of course this is not a good English sentences. Okay, is or is not going concern. It's not I don't we should even say this, but this is how we say it for this chapter. It's a strange English sentences. It's not going concern, but it's the easiest way I can think of to help you guys remember this. Okay, if you want to use the original sentences, this is it. It is appropriate to use the going concern assumption in preparation of the financial statement, or it is not appropriate to use the going concern assumption. Okay, I just call you is or not a going concern. Okay, as long as you understand the concept, that's enough. If you want to copy it here, write it in the answer. This is where you go to all the objectives and copy it down. Okay, so I serve you both purpose. Okay, Yeah. And second part, okay, is or is not a going concern, and then you still need to know whether there are material uncertainty exists. Because if there are material uncertainty exists, you need to disclose it. So it's very similar to subsequent event. Adjusting event, you can tell the client it's not a going concern, you will need to amend the whole financial statement using our alternative basis. If it is not an event that suggested it's not a going concern, but material uncertainty exists, you will still need to disclose it. Okay, so disclose it, but you have different disclosure in this case under going concern two situation. Implication of the auditor's report. This is the same old stuff. Okay, whether the keen opinion or modified opinion. Okay. Exam guide. Communication with those with charge with governance and management. I added the word management here because more than TCWG, there's something else we need to discuss in this chapter. First of all, this 260 is with those charge with governance communication. And here is the objectives and definition. I'm not going to go further with you, but I want to draw your attention to here. There are like 6-7 pages of all the matters that you will need to communicate with those charged with governance under HKSA 260. Okay, for example, auditor's responsibility, plan the scope and timing of audit. Okay, there's a load of them. And for this chapter, there's actually nothing else to ask you. The question is like whether you need to communicate these matters to those charged with governance, or what are the matters that you need to communicate with those charged with governance. It's basically just a copy and paste. That's the question of this. But of course, why I want you to read this part. And for example, if there's really a question, ask you to list out the matters that you need to communicate. Yes, okay, just pick one or two for each area. Okay, don't just start copying everything. Okay, pick ones that are related to your question because there's always still an audit issue. Okay, or there's some kind of circumstances that hit certain areas here. And other than each case, SA 260, actually more questions will actually on this part because there are other auditing standards that requires you to communicate certain things to those charged with governance, especially related to fraud. And remember, if you discover a fraud matter related to fraud that are in the auditor's judgment relevant to their responsibility, if auditors have identified fraud, okay, fraud identified, NET of auditor procedures necessary to complete audit. These are the matters that you need to communicate with those charged with governance if you identified a fraud. Okay, so if the question is actually on fraud, when the matters, the audit matter, the audit issue in the examination, the case facts is talking about this, your answer will say something like this. You need to communicate with those charged. Okay, we actually come across such kind of answer when we go through audit procedures. Okay, and you can see when the question hitting laws and regulation, evaluation of mistake by external confirmation, open funds, related parties, etc. Particular auditing standards. You see, subsequently when concerned, there are certain things that you actually need to communicate with those charged. Therefore, when these things happen, and it asks you audit procedures or audit response as an auditor, communication with those charged is actually one of them. Okay, so please read through this. I know this is clumsy and boring. This is the super boring part of the exam of this examination because these are all the really dull and boring wordings. But sorry, we will have to at least go through them once. Okay, I wouldn't say there will be a question a lot of marks within this, but this is actually helping you to know the different areas or different topics within the whole audit process that actually important to those charged with governance because they are important to management and those charged with governance. That's why they are important to us as auditor. That's why they are important to you as a candidate in this examination. Okay, because these are the areas that draw auditors and management attention in real life. Okay, what matters are all listed here. So at least read through them once, please. And when you read through it, you will find another part of written representations. Okay, written representation. This is the definition of objectives. And here, what I want to tell you is written representation is something we always, and it is a must that we obtain such letter from the management. Okay, the management actually make different written representation in this letter, telling that they already fulfill their responsibility on different areas. So what are those areas? You can see the same similar looking tables still go on and grow different auditing standards. What are the things that we need to obtain written representation from the management are all listed here. Okay, so what you need to do, read this table side by side with the communication with those charge requirements. After you do it once, you will have an idea of all the important areas within our whole audit process. Okay, it's this still very long table, read it side by side. And one more thing here, you must read this part. Okay, there will be questions like this, and you need to always hold these sentences. Okay, written representation itself is a piece of audit evidence, but alone they do not provide sufficient appropriate audit evidence. It is a really confusing sentence. Okay, why is a piece of evidence that cannot be used to provide sufficient appropriate evidence? What does that mean? Because written representation is just like an assistance. Okay, just like the auditor's assistant, just help us by the side. Okay, because we are asking the audit, our client, to say that I already told you the truth. I already provide you all the information you need, and all I said are true. Okay, I did not lie to you. You are actually making the client to say something like that in the written representation. But someone swear they tell the truth doesn't mean it is the truth. Okay, that's why a written representation is just helping the auditor, just confident us. Okay, the client swear that they tell the truth. Okay, so you serve the purpose like this. Okay, but you still have to fulfill the auditor's responsibility to obtain sufficient and appropriate evidence that is reasonably to be expected to exist. Okay, so you do your audit work, you do stage 2A, audit planning, stage 2B, response, you do AER, UCRs, the technical procedure, test of control. Everything you need to do, you still need to do it. So again, same sentences, nothing's changed, adding something new. We will need to obtain a written representation from our client to making them say they already tell us and provide us everything they know and they have on hand. We already have everything we got. Okay? Therefore, in the examination, you will come to a time the examiner asks you, for example, can I not send the audit confirmation, not send a bank confirmation, but ask the client or management to provide us with a written representation? Or you will see something like that. Your client says that, I will provide you a written representation that the bank balance and the bank loan is correct. You don't have to send a bank confirmation, something like that. Whenever come to a case like this, okay, you answer using this part. Okay? When the auditor is not able to obtain sufficient appropriate audit evidence, it means that if you don't let me send bank confirmation, it would be a limitation of scope. You already learned limitation of scope just now, okay? Then we may need to issue a disclaimer opinion or ON, except for limitation of scope. Okay, depends on the severity of the matters, or whether this is material and pervasive or material or not pervasive. But I use the word disclaimer here. Okay, because if your management do not provide or refuse to provide a written representation letter, you always need to issue disclaimer, even if you completed every single piece of audit work and obtain all the appropriate audit evidence you have. Okay, no matter how good your audit is, how good you perform your audit, if eventually your management refuses to provide you a written representation, you will not be able to issue an opinion on the financial statement. So this is interesting. Okay, the written representation alone do not provide all the evidence, but without a written representation, we cannot express an opinion on the financial statement. So this is the key part, and that's why it is easy to remember. Okay, this is like an egg and chicken question. Okay, egg and chicken situation. Okay, we cannot live without it, but with it actually do nothing for us. Okay, this is the interesting part, and I hope I present it this way. You will have a better understanding in your head. And reliability of written representation may be called into question. Remember, when we talk about the chapter on fraud, we talk about integrity of management. If there's like fraudulent financial reporting or misappropriation of assets, something like that, remember, there will be items, for example, non-compliance of law and regulation, litigation, and claims. These items will all probably more likely for fraudulent financial reporting. All these different areas, all the issues will lead to us to question the integrity of our management. If the integrity of your management is in question, then the reliability of the written representation may be called into question. Okay, so do you know the differences here? Your client do not agree to provide written representation, refuse to give you a written representation letter. This situation, your management do sign the written representation letter and give it to you. Whatever written representation request, ask your clients are okay to make it and sign the letter. But in this case, the problem is you do not trust your client. Their integrity is in question. Whether they agree to provide a written representation to you is not the matter anymore in this situation. Okay? You cannot get a written representation without disclaimer. If you get a written representation which is useless, you cannot rely on it. You don't trust the written representation. It's the same situation. You still go disclaimer because you cannot rely on them. Of course, in this situation, okay, you will need to perform more work on the risk assessment and determine any of further audit procedures. Okay, because actually, your client did provide you with written representation, but if you question the reliability, the only thing you can do is to do more audit work to reduce the risk to an acceptable level so you can issue a clean opinion. If you cannot do that, go disclaimer. Okay, so again, it's the same, nothing changed. You are still going through the same thinking process. Something happened. We assess our MM, perform further audit procedure. You still cannot obtain sufficient evidence. Either go disclaimer or if you confirm it is an acceptable disagreement or acceptable limitation of issue a qualified opinion or even an adverse opinion. You have to, okay? It depends on the situation. But if
this is my tip to you. If you happen to have a question that you determine it, the question is on written representation, and if the question asks you impact on opinion, it will most likely be a Group 2 question. Remember for number 2 we talked about just now. Written representation most of the time is talking about limitation of scope. Okay, if you ask me, can it be a Group 1 situation for written representation? Yes, it can. With this part, it can probably be a Group 1 question if there's actually some kind of fraud that you confirm, or some kind of fraudulent financial reporting on the software that you actually confirm in the case that it may be a Group 1. And less likely, if a question is want to ask you on written representation, your answer will most likely on this part, which will put Group 2. But for completeness purposes, you will have to include all 3 situations here in myself. So again, please read the question carefully and read the case facts correctly. Okay? That's how you determine what you are going to put in your answer. The answers are all here in the exam file and out here on your hand in your head. Therefore, that you just need to pick the right things to put in the right part of the answer. Okay? The only thing that you can go wrong in this examination is to read the.
Okay, moving on to question number 6. Question number 6. This is a question on subsequent event. Very clear. Look at the question, evaluate the implication of this subsequent event. The question already helps you establish that this is a subsequent event. Somehow a little bit easier, but it didn't change how you answer the question. You still need to do the same way. Again, evaluate the implication of the subsequent event, and then ask you to propose the relevant audit procedures. It includes both stage 2A and stage 2B. Remember, subsequent event is normal as any other audit issue. It is called a subsequent event because it happens after the year end. If it happens before the year end, it's just a normal audit issue. So how to deal with a subsequent event is the same as any other audit issue. But because it happened after year end, there is more things that you need to deal with. But first of all, the implication, how you evaluate, is the same. So the bank go into bankruptcy and your client got 20% of this cash in this bank. So the first thing you should identify is whether there is a possible going concern problem. Identify all the topics you can in the question first. So this is a normal question for subsequent event plus going concern. Right? Subsequent event plus going concern. So the implication, you need to think in this question, because this is a stage 2A question. So you need to identify the possible risk of material misstatement. And because it is a subsequent event, you also need to first determine whether this is an adjusting event or a non-adjusting event. Okay? Let's look at the answer together, shall we? How to evaluate the implication. Because this type of question, you can say it is easy because subsequent event question is always like this. You can say it's difficult because there's no case facts here. Section B, difficult part of question B sometimes is there is no case facts. Or there are very little case facts, and from this very little case facts, you need to be able to make your conclusion. For example, in this question, let's see. First of all, okay, this is an event after the reporting period. This is an accounting saying. You need to name it event after the reporting period. Subsequent event is an audit term. Event after the reporting period is an accounting term. Okay, M11 terms and M13 terms. So for this, you need to identify whether this is an adjusting event or non-adjusting event. And then that should be recognized or disclosed in accordance with the relevant accounting standards, which is HAS 10. You do not need to name HAS 10. All right? You see it is in brackets. So in examination, you do not even need to mention it, but you need to say whether it is an adjusting event and non-adjusting event. Whenever a subsequent event question, you always need to determine that it is an adjusting event or a non-adjusting event in the examinations. Okay, so it asks you implication. So the first step for you to do is to identify whether it is adjusting or non-adjusting event. You need to do that. And remind you of one thing. Some of you not familiar with HAS 10, okay, or not good at module 11, whatever. Remember, do not jump to conclusion that if you think like this, okay, delete it. Adjusting events means that you need to adjust something in your financial statement regarding the figures. There are some numbers you need to change. You need to do debit and credit for an adjusting event. All right? So something need to be recognized. Something need to be booked in your books. For non-adjusting event, you still need to adjust something. Remember, non-adjusting events still in your financial statement, you need to adjust something. Some of you think that adjusting event, you need to adjust something because it's called non-adjusting event. You think nothing you need to adjust. No. Both adjusting event and non-adjusting event will have impact on the audit because you need to adjust something. For non-adjusting event, you need to adjust disclosure because something happened. When you call it something happened after the reporting period, that something happened. If it is significant, you will most likely need to disclose the impact. All right? So, adjusting event, you need to adjust the financial statement figure-wise. Non-adjusting event, you need to adjust disclosure. So both ways, you need to handle it with care. It creates risk of material misstatement for both adjusting and non-adjusting event because some things need to be changed in your financial statement. Okay? This is the basic things you need to mention for a subsequent event. Every single time subsequent event question happen, this is the paragraph and the things you need to put down, something similar like that. Go back to my exam guide, it's the same. Secondly, regarding the case fact, this time the issue here is 20% of its cash balance is held at this bank, which is having a liquidity problem. The bank got a liquidity problem will lead to liquidity issue for our client. Okay? And you say whether it will trigger a going concern indicator. Going concern is a risk of material misstatement. Going concern problem is a high risk of material statement. Okay? So by identifying a going concern issue, means you identify the implication or identify the risk of material misstatement on your client. And then you will need to consider the required disclosure. Okay? Think about it. If your client do not have significant cash in BNB Bank, let's say only like 0.5% of the cash is being kept at BNB Bank, then this is not a significant subsequent event. You probably do not need to disclose anything because it's immaterial. But 20%, the 20% is a very interesting percentage. It's not high, but it's not low. 20% seems a lot, but it's not a lot, okay? That's what trigger the audit team need to consider the required disclosure regarding the evaluation of the ability to continue as a going concern. That's why the question set like around 20%. If I say 80% in this case, then it's obviously it is a very significant problem. you will have to disclose it. But 20%, so it is because it's asked you the implication, so you need to say things like whether we need to disclose and what is the required disclosure. And eventually consider whether proper disclosure have been made, okay, regarding credit risk and liquidity risk, etc. And then you need to talk about the disclosure for the subsequent event itself. Two things. The subsequent event disclosure is one thing, one paragraph in the financial statement. The disclosure of the going concern problem is another separate issue. So there are two issues in this case. So you need to answer you have an answer regarding the disclosure of the going concern problem. You have an answer regarding the subsequent event disclosure problem. So there are two things you need to mention here. And for audit procedures, same thing. Okay, there are three different things happen in the question you can address. For example, first one is talking about the subsequent event itself. So the audit procedures is to look for the impact. You see, we need to talk with the management executives and to understand the problem. This is what I said just now. Same concept apply to every single issue in this case. In every single issue, you need to check with the client. But this time, the problem is a subsequent event, a going concern, and with the bank balance. So separately, you will have to put down audit procedures respectively for each issue or each topics you identify in the question. Okay, I'm not talking about audit. I'm just talking about English comprehension. When you read the case file, read the question, you know there are multiple problems and issues that you can mention. Therefore, when the question asks you audit procedures, asks you the implication, you need to address it one by one. So, mention one or two procedures that can tackle subsequent event. Mention one of the procedures regarding the going concern issue. Audit procedures, evidence related to the other items that can help with the liquidity issue. This is about the bank balances. Okay, legal letter, legal counsel advice regarding whether we can get the bank balance back. What is the management response and action regarding the bank balances? Whether they think this is significant or not. Okay, what you need to learn here is to write down what audit procedures that is tailor-made to the problem. So first of all, you need to be able to identify the problem properly first. Otherwise, if you randomly just write down all the procedures that cover subsequent event or going concern or whatever, you can copy from past paper, you will not score marks. You need to analyze it properly. You see, they mention different things here. It covered the required disclosure on the going concern, on the subsequent event, whether it is an interesting event or an interesting event. This is for how you answer a question for subsequent event and going concern, and they mix it up with three issues: subsequent event and going concern. And actually, the subsequent event is regarding the bank balance, which lead to a going concern problem. You see, subsequent event about the bank balance that lead to a going concern problem. See the flow. So your answer should follow the exact same flow of the question. So again, the important thing of this question is to identify this properly. All right. Moving on to Part B and C. Part B completely irrelevant to Part A. It jumps to talk about other information and it talks about a huge description on some discrepancy of other information. So if there's a question on other information, extremely easy. Just go to my exam guide, the section on other information, and describe the responsibility of the auditor regarding other information, 3 marks. This is completely definition question, copy and answer. The procedures for this is in the description. You just follow it, copy and write down the answer, and the answer is here. I'm not going to go through this with you. Please go through it by yourself. This question, basically, this 6 marks, you just copy the answer from whatever materials you got for other information. You will get more than half of the marks here. Okay, don't worry. It's extremely easy for other information. I'm not going to go into details. Okay, feel free to ask me questions if you have any problem or any confusion. Okay.